Welcome to The Trade. I'm your host, Theo Goodman, and I'm here today with Vays from Brave New Coin, BTCVIX from Whale Club, and George Samman from Semantics.com. How's it going, everybody?
Good.
Good, thanks.
Good. Getting ready to go to San Francisco to speak about blockchain. Should be fun.
Excellent. All right, George, what do you have for us today?
I'll start with what everyone's talking about, Ethereum. So it has been moving up parabolically over the last couple of weeks, and we were talking about this a couple of times and said that this move is getting super extended, and at some point it's going to end, and it went all the way up to about $10 today, which is where some people thought it would go, and it's come off big since there. But what I've been noticing on the daily is a big divergence in RSI from the last price high before it corrected to the one that we have now. So I think, this thing is going to start to correct and correct pretty hard. I don't know when yet. Divergences are just that until they're proven. The price continues to go higher, but if you look at the 4-hour, it's looking a little different. The thing about that is that we're seeing a big candle here, an evening star forming, and that could be the beginning of the downward trend, but we can't say that yet. This thing has been really strong, but there's plenty of room for it to the downside from here, and on both the daily and the 4-hour Bollingers, it has come out of them to the top side, so you should see some mean reversion at the very least going forward. Here is the Shanghai, and China's done some monetary policy and has started to move up. Looks like we have a double bottom here. They cut the reserve rate requirement, and they have been devaluing the yuan again, as we can see in this chart right here. So it's starting to move back up after they've been trying to set it. So we're seeing some capital flight perhaps again out of China, but at the very least, we see Chinese monetary policy starting to come into play, while the BOJ and ECB and also the Fed have some big meetings coming up in this month. So the U.S. dollar was pretty strong in this rally and has started to come off in the last couple of days. Back to still in a position where it's kind of in an uptrend, but not as strong as it was, and this is probably because there's a lot of uncertainty around what the Fed is going to do, what they're going to say about rates and the economy going forward. So if they don't raise, the U.S. dollar shouldn't be so strong. However, there's some other headwinds there, which is the BOJ and the ECB and what they're going to do. So if you look at the euro, USD euro, it's rallied hard. So dollar's doing well versus the euro here, and that's because what people are expecting out of the ECB, which is massive QE or maybe more negative interest rates. So how that plays out, we will see. I think we'll be in a holding pattern here in a lot of charts up until those things come into play. Maybe some volatility, but I don't think you'll see much until there's some resolution there. And you can see that like with U.S. dollar versus the Russian ruble. So, oil's been going up, so this chart has kind of come down a bit. And you have also the Canadian dollar, which has done kind of the same thing as well, starting to strengthen versus USD. And, here's the SPX. It's been rallying. It's gone up above its 50 and 100 days. And the thing that's starting to happen here that I like is risk on is starting to look real again. So you see that the 50-day moving average is starting to actually curve back up. That's a good sign. But what we also have here is things like NIMO and NAMO, which are McClellan oscillators, making multi-year highs. This is a one-year chart, but actually if you go back 3 years, they're both high. So what that's telling you is that there's big breath coming back into the market, and you're getting these big moves of buying and selling stampedes. While it's overbought short term, I think these moves are actually realer than people think they are at this point. And here's the IWM, which is the small caps. It's not as strong, but it's starting to look like it might start to lead again. Like to see a little bit more better action there. But the VIX has come down tremendously to a point where you have to think that this move and rally is looking realer by the day. And the reason why I like it is because things that are supposed to happen when you're risk on are starting to happen. So we might get a correction in here at some point, but what we're seeing here is a real move. And I think what we'll see is that it could go either way up until the next 10 days. But like I was saying before, central bank activity is going to be strong, and there's a lot of events coming up. So how that plays out could really affect everything. Thanks. That's all I have.
Yeah, I was just gonna say, I think I heard some screaming in the background. Must be some of those people that bought the Ethereum top, George. So, yeah.
Yeah.
Definitely.
Yeah.
But I actually wanted to, first of all, go back, and I actually made this chart on Sunday for our Setup Sundays that we do over on the Whale Club TeamSpeak. And I was saying that, with the Spider Crusher FCMR trends, we did have a confirmed, confirmed reversal close on USD JPY. And a lot of people like to take this as extreme bullishness and to look for a position. And I said, the market makers, especially with the algorithmic trading, love to go back and retrace these candles fully. And I said it'd probably actually make a couple of full retraces of these candles. So if we just quickly then go to where we are today, I mean, this played out almost too perfectly. We change our tool here. Is this it? We came down. We took out the bottom of this candle, and we took out the top of where all the stops were for the shorts. And now we're sitting basically back inside range here. So, really, I'm actually subscribed to the same exact thing that I was anticipating on Sunday, and that we're going to chop around here maybe Wednesday, Thursday, and then we're going to get a distinct break. And I'm leaning to the upside, a lot of the same reasons that George is. And then if you can go and take a look at some of the economic data that's coming through. We have non-farm payrolls on Friday. That's a big number. It's definitely going to influence USD. And I think it's going to be a big rally out of this consolidation phase. So then just to move over to align that with where the S&P is, we actually broken out here on the daily for S&P, and I really don't see much for resistance till out at this level. And that's 2,000, so that's a big round number here. And likely, if we get up into this area, we're not just going to stop. The algos are going to push into this order block. So, looking for something in this area. That's really all I have as far as kind of the macro SPX indexes and USD JPY. And I will say I'm pretty much so in line with what George is saying from kind of a bigger picture. I think the central banks are coming in. We got the BOJ and the ECB and the Fed all next month. So it's going to largely be action, though, coming from ECB and BOJ. And I don't think they can have any hint that they're backing off this, the stimulus, because they need to lift all the heavy weight that the Fed isn't doing right now.
Okay, definitely. So you think that the moves are happening right now in anticipation of those meetings next month?
Yeah, I mean, it's definitely, there's been some analysts, out of JP Morgan, as well as even Draghi himself yesterday said, there's no limits to what we can do with as far as buying. BOJ is almost buying everything they can. So with those expectations going into the meeting, if you're a central bank, you actually have to exceed those to keep propping the market up. If they come out anywhere short of what those expectations are, we're going to see, reversion and, not a desired effect. And I think the central banks are starting to not be as effective with their job owning. They still do definitely affect the market, but it's not like it used to be. And I think the market needs to actually see some action out of those banks, out of the central banks, to kind of reinstill confidence that they still have the market's back with the Fed sitting on their hands.
Okay, great. Okay, Tone, what do you have for us today?
Hey, so I'll kick off with Bitcoin like I usually do, and again, not not much has changed at all. I still have my downtrending trend line, and we keep making lower highs. That is completely confirmed by the indicators down below. So what we are looking at is right here. We just had another overbought condition on the RSI, and it's lower than the previous RSI condition. So I'm still looking for Bitcoin to either consolidate or preferably fall down to my optimal buy zone in the low 300s. There's just so much controversy right now over the block size, and the halving is not till 3 to 6 months away. So yeah, I'm still looking for consolidation and some downside. I'm not rushing into Bitcoin right now, but in my view, Bitcoin is always good to hold and is always a good buy. Let's talk about the S&P. Now, the S&P is really interesting. I actually agree with George mentioned it, and also VIX, with exactly what VIX said. I strongly recommend listeners go back to our year-end video of last year, which took place right here. And in that video, I talked about an early year scare and then a reversal. And then I also talked about the divergence that needed to take place and that took place right here with a new low, but indicators were going higher. So I have been bullish. So right now, we are going up. We broke above the 50-day. And today was a good day because we did not have a reversal candle. It was looking like a doji all day long, but it wasn't. So now I am really looking at the zone right here. 200 is very, very critical. It's a big round number, just like VIX said. And it's also prior support. So 200 would be big, and then the 200-day moving average is coming down. George also showed the overbought McMillan oscillator, and it's getting way overextended here. So after we get to this area, I'm definitely expecting some downside. How big that downside would be, nobody knows. It could be as simple as coming back down to the 50-day moving average and the 1950 area, and then breaking out from there, or it could be something bigger than that, because if we look at the weekly S&P 500, it's not looking good, because on the weekly, we have lower highs, we have lower lows, and your indicators, especially the MACD, is confirming the fact that we could be in a much bigger bear market. We also have the declining 50-week moving average, and there is significant resistance right here on the weekly. We are coming up on the 20-day, which is that dotted line, 20-week, sorry, and that 20-week has been critical in the past. You can see it as support for years. Then it did get broken right here, held up by the 50. And then, well, the 20 has been good. The 20-week moving average has been very, very good. And now we're approaching it from below, and we'll see what happens. So I am looking to time a short on the S&P 500, not really looking for a breakout right away. All right, so that's S&P. Let's briefly talk about oil, which mimics. Here's oil daily. So today was a very critical day. We broke out and we closed above 34, which is very, very bullish, because we haven't closed above 34 since the first week of the year. And this is pretty good, and we still have room. We have room on the daily RSI. We definitely have room on the daily MACD. I think oil can make a bit of a run here. We do have some resistance at 36 because of this channel, which also has resistance at 38, but they're not that strong. And I think we can definitely break this channel, and oil can make a run into this 40 zone. But after that, I think there's definitely gonna be downside. Now, briefly looking at the weekly oil, you also have this 20-week, which didn't do much here. Huge collapse there, but it did hold it right here, and that's coming up at 36 as well. But if we can get over 36, there's definitely room into this 40-45 range. So I think we will approach 40, and there's also this massive divergence, which is very bullish for oil. So I do see upside in oil to about 40, and then we'll take it from there. And finally, we have gold. And gold is looking bullish, even though the S&P is still looking a little bullish, but I think the S&P will take a hit, maybe another week of S&P upside and then down. This is a very big triangle that is calling for a pretty significant move in gold to the upside of about 50 points. I would draw the arrow bigger, but I'm out of room there. And if we break out, most likely what's going to happen is we'll make a new high, but you will have divergence with the RSI, which will set up a nice big move down from there. So looking at the weekly, just to see how far we can go up, as mentioned prior, we broke out of a previous high, we broke out of a previous high on the closing level. The next high is at 1300, nice round number, with a coming down 200 week moving average. So I am looking for a breakout into this zone, and then I will probably look to short the hell out of gold because I think it's going to do this. But that's an opinion. I'm going to take it one day at a time. There can definitely be support right here at the 50 at the 50-week moving average. Either way, gold is getting overbought. Once the RSI gets into the 70 zone, this is overbought. Everything is lining up for gold to make one high before its final bottom, in my opinion. Okay, take it from there, guys.
Okay, great. Thanks a lot. So still think gold is going to go to triple digits after it makes a new high?
Yeah, I mean, I'm pretty sure gold's going to pull back from 1300 back down to about 1150. I have a lot of confidence in that. If that move works out like I'm expecting it to, I will reassess my triple digit at that point. I'm still leaning towards it, but hey, you never know. Trading, you have the right to change your mind any minute of the day.
Definitely. Okay, thanks for that. Moving over to Bitcoin, I just wanted to point out something that's been happening. It's been happening most of the year, and that is that no longer is Bitfinex the exchange with the highest US dollar price, but a lot of the time, or most of the time, BTCE has had the highest price, and we've had a premium over at BTCE as opposed to Bitfinex. Now, you can interpret that however you want, and there's different theories about it. Bitfinex does have hidden orders. Maybe that has something to do with it, but it's definitely something interesting that's going on. Now, in the past, when that happened, in 2015, when that happened, after that, there were big up moves, but we'll see if this is a precursor to that or not. We'll have to check that out. Moving over to Bitcoin on the weekly over at OKCoin, BTCCNY, still looks definitely bullish on the weekly chart. Not a lot has changed, but you can definitely see a lot of the resistance here from the past weeks between 2,980 to about where it is right now, 2,830. You can see these wicks. That whole area has shown a lot of resistance, but the price is being also supported when it gets down to 2750, 2760. There have been buyers there the last 2 weeks. So, let's see what happens. A lot of people, think in maybe a week, maybe 2 weeks, there could be a breakout in one direction. So let's keep an eye on that. Moving on to Litecoin, not a lot of people are covering Litecoin, and that's probably because there hasn't been a lot of movement. But if you do look at the week chart, I mean, you got 1, 2, 3, 4 weeks now. It's just kind of creeping up, and you've had this area where there's been a lot of support for a long time. So, this could be a creeper, and then it could really explode and challenge that weekly Ichimoku cloud at about $5 over at BTCE. Now everyone's talking about Ethereum, and just wanted to show the daily chart. Now this is the Ethereum to Bitcoin ratio over at Kraken, and last week when we did the show, we had a lower high, and I thought, oh, this is just going to kind of go down. What it did is it went sideways, and then then it just exploded. So, let's see where this goes. Now, I have no idea where the top is going to be. Now, let's pull up the dollar chart over at Kraken, and yeah, that's a nice wick there. So it hit 990 at Kraken, 990. And, it does kind of remind me a little bit of when Litecoin went up, but, we don't have the same fever that we did when Litecoin went to 49. So I don't know. This could be the top for now. Man, that daily candle doesn't really look bullish right now. Let's see how it closes. But man, that's a big move. So it went from just a week ago, 5 something, and now it hit 990 today. So if you're able to sell the top, good for you. All right, and that's all I've got today. I want to thank our sponsor.
Let me comment on that real quick before that. When you said that the fever isn't as high as in Litecoin, I have to disagree with that, Theo, because the fever in Ethereum is pretty high. I mean, I'm getting like comments that people want me to get hit by a bus because I'm critical of Ethereum and I think it's a waste of a project. But I don't remember anybody being that critical back in the days of Litecoin flying around.
Right. Well, what I mean is not anything to do with the technical aspect of Litecoin or Ethereum at all, but just that, that was the same time where Bitcoin was, climbing Mount Gox, and we had it climbing to, up, it was on the way to 1,000. So the fever then was way different than it is now. And I don't know, you could argue, okay, back then you couldn't short Bitcoin on that run up, and you couldn't short Litecoin for sure. You can short Ethereum, so I don't know if the shorting Ethereum is fueling some of these moves or not. I don't know. I'm not sure, but
it fuels it at first. Shorting fuels it initially because before, if you had 100 people long and then 50 people want to go short, now theoretically in the stock market that means that 50 are short, but now 150 are long. So for every short, there's an additional buyer. So it fuels it at first, and then when the last person finally buys, it ends very, very abruptly.
Yeah, definitely. So I think that that could be fueling some of this. You can short it over at Kraken on this chart, so that could be fueling part of it. But I just mean in general, the fever, the Bitcoin fever is not the same, or even Ethereum fever. I don't think that's comparable to what we had at the end, the last half of 2013. But yeah, that's my opinion. You're right. Ethereum fever is real, is a real thing, and it's on the tip of everyone's tongue, and a lot of it has to do with the price and whatever news announcements related to the Ethereum technology. But anyone, I'm sure we'll get comments, so please, if you have an opinion about Ethereum, give us some comments. Please give us some feedback. If you don't like what we're saying, tell us we're wrong. If you like what we're saying, give us some feedback on that. I want to thank our sponsor for the show, Vaultura, where you can trade Bitcoin and gold. real trading. You can trade 1 milligram of gold, which is the lowest minimum in the industry. Definitely check them out, Vaulturo.com. Thanks for watching. This was The Trade. Check out World Crypto Network. Subscribe to this channel. Give us a thumbs up. Also, check out Bitcoin.com in the news section where you can also watch The Trade. Talk to you next time.